Welcome back to Explain the Charts, your ultimate destination for in-depth market insights and actionable analysis. Today, December 5th, 2025, we're dedicating our focus to Ethereum, or ETHUSD, a cryptocurrency navigating a highly complex and pivotal period marked by significant technological advancements and contrasting market sentiments. The crypto community has been abuzz with the recent activation of the Fusaka upgrade, which went live on December 3rd, heralding a new era for Ethereum scalability and overall efficiency. This monumental network enhancement introduces PeerDS technology, a crucial innovation designed to dramatically boost data capacity for Layer 2 rollups, enabling nodes to store only a fraction of blob data and theoretically unlocking an 8x increase in scalability. Such an improvement is expected to make Layer 2 interactions significantly more cost-effective and enhance the entire network's performance, drawing considerable excitement from developers and users alike. The anticipation surrounding Fusaka was palpable. Major financial news outlets and crypto publications alike extensively covered Ethereum's impressive surge, reporting its decisive break above the key $3,000 psychological mark and its subsequent push past $3,200. Many analysts eagerly drew parallels to previous successful upgrades, like the Pectra fork in May of this year, which famously sparked a substantial 29% rally in ETH's price, fueling widespread predictions of further bullish momentum post-Fusaka. Indeed, the most optimistic projections foresee ETH potentially targeting the $5,000 level in the short to medium term, underscoring a strong underlying bullish conviction. However, this wave of bullish excitement arrives on the heels of a rather turbulent period for the broader crypto market. Just days prior, around December 1st, a significant liquidity flush event triggered a sharp and widespread crypto crash, sending not only Bitcoin but also Ethereum and XRP spiraling downwards. During this chaotic period, ETH briefly plummeted to approximately $2,841, experiencing a notable 5% weekly decline that underscored the market's inherent and often unpredictable volatility, especially when compounded by high leverage and thin trading conditions. Adding another layer of complexity, a deeper, long-term market analysis revealed that Ethereum had already experienced a substantial 45% crash from its impressive August 2025 peak of $4,950. This significant devaluation over several months is largely attributed to the increasing dominance and efficiency of Layer 2 networks, which, while beneficial for scaling, inadvertently diverted transaction activity and associated fees away from Ethereum's mainnet, thereby reducing ETH's deflationary burn mechanism and leading to considerable institutional ETF outflows, reportedly totaling $1.4 billion in November alone. Yet, amidst these contrasting narratives, there are compelling signs of underlying strength, consistent whale accumulation, growing institutional interest, and innovative new tokenization initiatives, such as Amundi's recent launch of a tokenized Euro money market fund utilizing the Ethereum blockchain, all signal enduring demand and long-term confidence in the ecosystem's foundational value. Furthermore, WisdomTree's introduction of Europe's first fully staked Ethereum ETP provides another robust channel for institutional engagement, indicating a maturing market structure. To truly understand the implications of these developments, let's first establish a comprehensive overview by examining the one-day chart across its entire available data range. From this panoramic view, we immediately observe Ethereum's remarkable upward trajectory, which culminated in an impressive peak of approximately $4,950 in August 2025, a significant milestone that garnered widespread attention. This powerful peak was followed by a prolonged period of downward pressure, clearly illustrating the 45% correction that news reports emphasized as we approached December. The chart distinctly displays a series of lower highs and lower lows from that August zenith through late November, effectively forming a well-defined downtrend channel. This descending channel now acts as a formidable overhead resistance, representing a crucial barrier that Ethereum will need to decisively overcome to signal a broader structural bullish reversal in its long-term trajectory. The substantial trading volume observed during both the peak formation and the subsequent decline periods is indicative of strong participation from both fervent buyers and determined sellers, marking profound shifts in overall market sentiment and underlying conviction. This expansive view is essential, providing crucial historical context that underscores both the immense potential inherent in Ethereum's technology and the formidable market challenges it has recently endured. Now, let's refine our focus on the one-day chart, specifically zooming into the critical and highly volatile period from late November through December 4, 2025, to conduct a more precise analysis of the immediate market reactions. Observe the prominent large red candle on November 20th, where the price experienced a sharp decline, plummeting to a significant low of $2,788.37. This substantial dip served as a harbinger for the crypto crash alert that subsequently gripped the entire market on December 1st, with ETH closing that day at $2,803.60 after touching an even lower intraday low around $2,718.80. This rapid sell-off, while attributed to a liquidity flush rather than fundamental issues, rigorously tested crucial psychological support levels and demonstrated the market's fragility. Crucially, immediately following this downturn, we observed the formation of a robust and powerful green candle on December 3rd, its strong close at $3,190.40, with an impressive high reaching $3,214.70, directly and unequivocally corresponds to the overwhelmingly positive news surrounding the successful launch of the Fusaka upgrade. This swift and decisive upward surge vividly demonstrates how quickly and emphatically positive fundamental news can translate into significant price movements, unequivocally confirming the numerous headlines proclaiming ETH's break and surge past the $3,000 barrier. However, the subsequent candle for December 4th presents a slightly more nuanced picture, showing a modest bearish engulfment as the price closed lower at $3,134.13. This subtle retracement indicates that while the Fusaka upgrade initially generated immense excitement and buying pressure, there was also a discernible wave of immediate profit-taking occurring around the $3,200 resistance level. This aligns perfectly with certain news reports that hinted at a post-Fusaka price slide amidst a broader, albeit minor, crypto sell-off, suggesting that overhead supply remains a factor. The notably increased trading volume accompanying these decisive upward and downward candles further underscores the market's heightened attention and the strong conviction driving these recent, impactful price movements, signaling a battle between bulls and bears. To gain an even finer understanding of the intraday dynamics, let's transition our view to the one-hour chart, allowing us to examine the intense price movements that unfolded from November 30th to December 4th with enhanced precision. Notice how ETH was initially attempting to consolidate around the $2,990 level on November 30th, prior to the dramatic and swift plunge that commenced on December 1st. Multiple consecutive hourly candles during this period clearly depict rapid and sustained downward pressure, unequivocally confirming the speed and severity of the liquidity flush, event that forcibly pushed prices to an intraday low of $2,718.80. This intense sell-off established a critical short-term support zone around the $2,700 to $2,750 area, a level that astute buyers subsequently defended with considerable conviction, preventing further immediate capitulation. Following this successful defense, the market embarked on a steady, albeit characteristically volatile, recovery trajectory, with momentum notably accelerating as the highly anticipated Fusaka upgrade drew nearer and then officially went live on December 3rd. The hourly chart vividly portrays the powerful upward breakout, characterized by a succession of robust bullish candles that propelled ETH swiftly and decisively above the significant $3,000 psychological mark and extended its rally towards the $3,200 level. This impressive hourly surge was unequivocally fueled by intense speculative buying and the overwhelmingly positive sentiment surrounding the upgrade's transformative potential, but also highlights the inherent volatility in this rapid ascent. However, in the later hours of December 3rd and throughout the trading day on December 4th, we distinctly observe a slight pullback and a subsequent period of consolidation, with ETH struggling to maintain its absolute highest levels. This behavior reinforces the presence of resistance around the $3,200 zone and indicates that early profit takers are now entering the market, suggesting a temporary exhaustion of immediate buying momentum after the initial euphoria. For the most granular perspective on current market microstructure, we'll now examine the 15-minute chart, pinpointing the critical and volatile period from December 1st to the precise current time on December 4th. This ultra-short time frame provides a vivid depiction of the swift and aggressive nature of the crypto crash that unfolded in the early hours of December 1st, showcasing numerous, impactful red candles accompanied by notably high downside volume. The rapid descent of ETH below $2,900 and its quick breach of the $2,800 threshold is undeniable here, powerfully underscoring the severity of the liquidity flush and demonstrating just how instantaneously markets can react to unexpected events. Following this sharp and concentrated downturn, we clearly observe a brief period of tight price consolidation, indicative of uncertainty, before the positive news surrounding the Fusaka upgrade began to significantly build momentum. Then, on December 3rd, the chart literally exploded upwards with a series of powerful green candles, not only breaking through successive intraday resistance levels, but firmly establishing price action above the critical $3,000 psychological barrier, and even pushing to impressive intraday highs near $3,241.57. This short-term rally was undeniably potent, reflecting intense buyer conviction and a strong speculative push. In the most recent candles, leading right up to the current moment, we see ETH finding a dynamic, temporary equilibrium, largely trading between the $3,130 and $3,150 range, oscillating with moderate volume. This recent price action suggests a phase of active price discovery, as market participants actively digest the implications of the Fusaka upgrade and reconcile immediate speculative gains against the more complex underlying long-term structural concerns. In conclusion, Ethereum's current price action is undeniably at a critical juncture, powerfully influenced by the recent Fusaka upgrade and its ongoing structural challenges. In the immediate short term, a pivotal resistance zone has emerged around the $3,200 to $3,250 level, where significant profit-taking has demonstrably curtailed upward momentum following the initial surge. A decisive and sustained break above this overhead resistance could realistically pave the way for a test of the $3,500 level, which is an optimistic but moderately likely target for many analysts post-Fusaka, especially if broader market sentiment remains supportive and institutional interest persists. Conversely, on the downside, the psychological $3,000 mark now functions as a crucial immediate support. A convincing break below this could signal further, more significant retracement. Should this $3,000 level fail to hold, the robust support zone around $2,800 to $2,850, which proved remarkably resilient during the December 1st crypto crash, would become the next critical line of defense for the bulls. Looking at the longer-term outlook, Ethereum's capacity to re-challenge its formidable August 2025 peak near $4,950 and potentially embark on a path towards the ambitious $5,000 to $6,420 range outlined in bullish scenarios, relies heavily on how effectively Layer 2 solutions are integrated with revenue-sharing mechanisms for the mainnet. Without a clear and equitable solution to the issue of Layer 2's potentially killing ETH's value by siphoning off fees and reducing the burn rate, achieving these higher, more parabolic targets remains a significant structural hurdle, making a more gradual, slower grind higher a more probable long-term trajectory. Conversely, a sustained failure to implement robust revenue-sharing models, coupled with persistent macroeconomic headwinds or continued substantial ETF outflows, could see ETH drifting back towards the $2,500 to $2,400 region, a level that Tom Lee previously identified as an exhaustion point for sellers. Although this scenario appears less likely in the immediate wake of Fusaka's positive impact, it still remains a pertinent long-term risk factor. For traders and investors alike, it is imperative to closely monitor ongoing whale accumulation patterns, particularly around established support zones, as these often provide early indications of market reversals or sustained buying interest. Additionally, keeping a vigilant eye on any forthcoming Ethereum upgrades, such as peer DS enhancements or major institutional announcements, will be crucial as these events possess the potential to significantly alter market sentiment and price trajectory. Furthermore, the broader macroeconomic landscape, including global interest rate decisions and inflation trends, will undoubtedly continue to exert a substantial influence on overall crypto market liquidity and Ethereum's ultimate price path. Remember, this content is provided strictly for educational and informational purposes only and should never be construed as financial advice. Always conduct your own comprehensive due diligence, critically evaluate all information, and consult with a qualified financial professional before making any investment decisions. Thank you for tuning in to Explain the Charts today. We appreciate your viewership and engagement.